Growth concerns for the US economy are overblown. Alvin Tan, Societe Generale. Alvin, the FOMC minutes raised some uncertainty. The heart of the issue is how much downside risk there is to the US economy, with some believing the market isn't pricing a further hike until 2017. We have more data due today. Are these concerns vindicated?
The U.S. interest rate market is indeed not pricing in another Fed hike this year, which is not justified in our view. We do think that the heightened concerns about the U.S. growth outlook overblown, and the economy remains resilient, though clearly facing headwinds. The U.S. industrial sector, for example, is underperforming relative to services. And this is part of the broader weakness in the global manufacturing sector. Nonetheless, we do view that U.S. growth remains resilient.
Overarching market trends of 2016 may be replaced by more choppy trading conditions in oil, equities, bond yields, and attempts by China to allay concerns regarding the yuan. But what is your take on the negative rates trend, and do you think more central banks are poised to join the club?
So the policy debate is gradually shifting towards utilizing more fiscal policy in the attempt to spur greater demand growth. Going forward, there is no doubt, I think, that more central banks will be easing further, and in China's case, I think that's quite necessary. But the balance of the policies, I think there's a great debate currently about what the policies will mean, and probably we need more than just negative rates.
Dollar yen is proving its safe haven status. Even the dollar is weakening against it. It's a pretty interesting move, isn't it, Alvin?
Yes, it has confounded a lot of forecasters in terms of the strength of the yen, despite the BOJ's implementation of a negative interest rate policy, and that boils down essentially to the yen responding as a safe haven of choice in uncertain and volatile global market conditions.
UK productivity versus other G7 economies has widened to the biggest gap since records began in 1991. We have a host of data from Britain released today, but how heavy is the Brexit fear weighing on sterling as opposed to macro data?
The main factor weighing on sterling since November is actually the Brexit risks arising from the likely referendum on EU membership that will be held this year in the UK. So quite apart from economic data points, it is overarching Brexit risk that is weighing on sterling. The trade-weighted sterling has fallen almost 8% over the past 3 months, at the same time as implied volatility in sterling crosses have risen sharply. Even if there were to be a deal on changing the UK's EU membership terms this week at the European Council Summit, we expect the Brexit risk premium to act negatively on sterling until after the referendum. At this point, it looks like the referendum is likely to be held in June, though that does depend on the deal being struck by early March at least. But our baseline scenario remains that the UK will stay on in the EU, but sterling will only be able to recover some ground after the referendum. So over the next 6 months at least, it is the Brexit risk that will be weighing on sterling and not really the economic data flow.
Indeed, day one in Brussels was deemed a disaster for David Cameron in terms of getting a deal. But what economical or political events should we look out for next week?
Yes, well, of course, this week we will see the outcome of that Brussels summit. So that's going to be important for near-term sterling direction and sentiment. Also, next week we'll get the UK fourth quarter GDP. That will be an important data point, certainly, for sterling. Apart from that, we'll also have the US fourth quarter GDP and the German flash CPI numbers. And above all, though, in terms of short-term market indicators, the evolution of oil prices will be very important as oil prices has lately been exhibiting a very high daily correlation with global equities. So I would say we'll see where oil prices move on from here.
Alvin, great to speak with you, thank you. Well, Loonie Dollar traders, make sure you click back for our Friday forecast focusing on CAD. For me and for now though, it's goodbye.